U.S. added 206,000 jobs in June as unemployment rate rose to highest since November 2021. Bitcoin dipped a hair on the news, but prices had already crashed over the past 48 hours as markets dealt with a crush of new supply. The U.S. employment market remained reasonably strong in June, with the U.S. Bureau of Labor Statistics reporting Friday the addition of jobs down from May's, revised from an originally reported 272,000 but modestly topping economist estimates for 190,000. The unemployment in June rose to 4.1% versus 4% in May and forecast for 4%. Average hourly earnings rose by, compared with forecasts for and May's. Looking at the metric on a year-over-year basis, it was higher by versus expectations for and at the previous months. For the 9% in, the price of Bitcoin BTC dipped a hair to $55,300 in the minutes following the news. The drop is negligible given a roughly 10% crash over the past hours as markets dealt with the crust of supply coming from Gox repayments and German government sales. Ahead of this morning's data, traders were putting nearly zero chance of a U.S. Federal Reserve rate cut at the bank's July 31 meeting, but more than a 70% chance of lower rates at the mid-September meeting, according to CME FedWatch tool. Speaking this week, Fed Chair Jerome Powell leaned somewhat dovish as he suggested a weaker job market might trump concern over inflation as the central bank decides on the path forward for monetary policy. While the headline 206,000 jobs added forecasts other than data to suggest some weakness, May's job gain was revised down to 218,000 from 272,000. In addition, April's originally reported job gain of 165,000 was revised down to 108,000. Taking the 3 months together shows an average job gain of 177,000 versus 299,000 for the prior quarter. In addition, while the unemployment rate rose just modestly, the 4.9% reading is the highest level since November 2021. A check of traditional markets finds U.S. stock index futures inching higher following the report, and the 10-year Treasury yield down 5 basis points to 4.31%.